So Americans might be thinking when the next rate cut might come. But the question to really think about is when the next possible rate hike might come. Are we going to get a rate hike? Are we going to see rates start to move up? Well, let's hear what Fed Musalem said, came out today, and basically just FYI, he's known to be more on the hawkish side of things. He more advocates for restrictiveness and keeping policy restrictive. And we've heard from him in previously being more on the hawkish side, but he came out today kind of cracking up, the door, opening up the door a little bit here on maybe possibility of a rate hike. Now he didn't say it explicitly, but he came out more hawkish than anticipated. Now, what did he say? Well, basically, he came out and he said he's wary of all the tariffs related price increases that will be temporary, as second round effects could be more persistent. So, being more worried about the second round of tariffs being more persistent, causing prices to move up, and that's what could cause the Fed to either keep things at hold, or if inflation starts to pick up, possibly maybe raise rates if the economy is still okay and it's still fine. He mentions if the second round of effects become apparent, then the Fed may need to keep rates higher for longer or consider more restrictive policy. So listen to that again. If the second round effects, he's talking about the tariffs, become more apparent in the inflation numbers, in the reports, and the prices, then the Fed may need to keep rates either higher for longer or consider more restrictive policy. He also said if the labor market remains resilient and the second round effects from tariffs become evident, or if medium to longer term inflation expectations begin to increase, actual inflation or its persistence, then modestly restrictive policy will be appropriate for longer, or a more restrictive policy may need to be considered. Now the market is still pricing in rate cuts. The market's pricing about 82 basis points of easing in the next 16 months, including 2 rate cuts by the end of October. But this will be highly dependent on April 2nd and in the future if we get more of this tariff trade war basically escalating. We're already hearing today Trump is going to announce auto tariffs, and we're seeing the stock market plunge on that, even though before that announcement he mentioned that he's going to give kind of a breathing room for a lot of countries out there in terms of tariffs, which caused the stock market to move up initially, but we're seeing the sell-off here because of those auto tariffs that he mentioned. He's going to talk about and announce today at 4 p.m. And as I look at the bond market, was initially selling off, but we're seeing kind of a bid here. And basically now you've got kind of a risk-off scenario in risk assets in the equity markets. So he, basically cracked the door open for possibility of keeping rates higher for longer, but not only that, but also considering more restrictive policy if needed. And if you remember in the 1980s, we saw inflation pick up, come back down, and then skyrocket again, and then the central bank had to come out and hike rates aggressively, right? Now, with the economy where it is right now, and I mentioned also if the labor market continues to be resilient and the job market is fine, the economy is fine, then it gives basically room for the Fed to do something about it, which is possibly keeping things restrictive for longer or maybe hiking rates. So if you get a strong economy, or forget about strong economy, if you get the economy still being where it is right now, and nothing is breaking, then yeah, don't expect those rate cuts to come so quickly. Right? Everyone's expecting rate cuts, rate cuts, rate cuts. Oh, the rate cuts are coming. It's coming. It's coming. We're gonna get, a slash of rate cuts very soon, and there's gonna be so much of it. And then when the rates go back to zero, then guess what? Everything to the moon, and real estate, and etc. etc. Well, according to history and cycles, we tend to see rates go to the zero bound, especially where we are right now, when things are really breaking. And where we are right now, economy is fine, labor market's still holding up. There's no need to go to the zero bound. And with inflation risk and prices possibly moving up higher, that's definitely a problem for the Fed, because they want to control prices and inflation. So they'll definitely keep an eye out on that. So April 2nd, definitely going to keep an eye out on that. We're going to keep an eye out on Trump, and continue to monitor this trade war, the tariffs, that we're seeing. I also want to mention one thing. It says as well here that in addition, the Fed Musalem basically said he noted several recent surveys indicate, right? So the Fed goes down and they also conduct their own surveys to figure out how businesses and consumers are feeling. So several recent surveys indicate that more firms have or are planning to raise prices in the coming months compared with surveys from fourth quarter of 2024. So obviously this makes sense, right? You're gonna hike prices, you're gonna put tariffs on certain goods, and those prices are gonna come in. Things are gonna be more costly. The businesses and the firms out there are going to pass it on to the consumer. So things are going to be expensive for quite some time, right? Especially if we don't get a break in the economy. So expect that to happen. When you also look at, certain realtor websites like Realtor.com, Redfin, etc., you tend to see a lot more inventory showing up. You tend to see days on market being higher. You tend to see also the prices for a lot of these properties. Yes, they're coming down a little bit, but if you look around, a lot of properties are showing up, but the high price, that we're seeing still continues to remain, right? We haven't seen those pre-COVID prices just yet. Maybe in certain properties, maybe in certain areas, depending where you look, depending on who's panicking, but we haven't got the real panic yet. So again, when we look at history, if the economy is still holding up, then we can expect the Fed to be hawkish, no rate cuts for some time, maybe a rate hike, and then maybe that could be the scenario where things finally break, right? Where prices move up higher, where yields and interest rates move up higher. Who knows? Maybe mortgage rates move up into double digits because inflation is running away, and it's not transitory anymore, according to the Fed. If you remember in my last video, talked about how he used that word transitory. So if that ends up happening, right, maybe it could be that ends up breaking the economy, which will end up breaking the back of inflation and causing prices to drastically drop due to all of this happening, right? And you can see a trickle effect, right? Consumers not spending money, prices moving up, the budgets get tighter, the costs increases, businesses start to lose money, they lay off workers, unemployment rate goes up, causing the market to plunge, causing prices to eventually plunge also due to the decrease in growth and recession. And then you'll get those rate cuts that everyone's waiting for. So be careful what you wish for, right? Because if you really want rate cuts to come, you better hope that it's not in an environment where the unemployment rate and the job market's getting worse off, right? You better hope that it's a Goldilocks economy, and that what we've seen in the past doesn't repeat again, or history doesn't repeat, but it often rhymes. So you get nothing similar to that, and that maybe you just deal with high prices for a decade until it becomes the norm and things start to get better again, and then maybe you get those rate cuts or easing eventually happening. But I don't see that. I don't see the Goldilocks economy. Maybe things are holding up, but if we do get that scenario of the hawkishness that the Fed member is speaking about, then that could be a big problem. So anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.